Okay. For those who were in the keynote now with Dari, it was, I think, as I mentioned, a really good setup to where we are going to take this conversation. So Dari, I'm going to pick on you because you gave us a lot of things to pick on. But I would do a lesser job of introducing each of you than you would be able to do of yourself. So I'd ask you to do a few lines about yourself, what you're currently working on, and perhaps just to this topic today, what you find particularly interesting based on your role around cross-border payments and what these new technologies, I say new relatively, knowing that mobile money was version 1.0, how they pertain to your daily life. Go for it.
Hi, I'm Matt Putman. I'm the co-founder of eCorker. eCorker is, it's a South African founded and based business that helps SMEs start, manage, and grow their businesses. We offer payments acceptance both offline and online. We offer financial services and business management tools to help SMEs both in the formal and informal economy, I guess become part of this digital ecosystem and hopefully grow their businesses, grow the economy of SA. eCorker has just recently been acquired by the Nedbank Group as of yesterday. Actually, it's been the transaction's being finalized. Thank you. It's been a thank you very much. It's, as you'll know, these things are long and painful. But we're very excited, I think, for the next chapter. And part of that chapter for us is really thinking about how we take what we've built in South Africa and we solve what we think are very similar pain points for small business owners in other African countries. And I think as part of that journey, we've encountered, I think, a lot of the friction points and the pain points that were mentioned in Dari's speech, just now. And I think also being at the B20 summit 2 weeks ago and having, I guess, the privilege of speaking to some of the top leaders in Africa, trying to figure out how do we really unlock this kind of free trade, open Africa, Pan-African type ecosystem. So I think many of the pain points that you've spoken about, things like liquidity, things like changing, to external currencies like USD, where we see massive kind of leakage off the continent, as well as, I guess, the time-based delays, etc. We don't have the solutions yet, but we are, I guess, working on trying to understand how we can use these new forms of technology and how we can bypass, I guess, some of the dated payment rails that exist in Africa.
Beautiful. Wonderful. Dari, if you'd like to go next. I suppose you've just done your intro before, right?
I'll pass it to you.
All right, thanks, Dari. Good afternoon, everyone.
Should come on screen.
Good afternoon, everyone. There we go. So my name is Jared Kennedy. I'm part of the team at CVVC. So we're an early-stage venture investor that focuses exclusively on the blockchain ecosystem and the blockchain tech stack. We are Swiss headquartered, so we've got a global investment strategy, but a very core component of that is Africa. We've done about 19 investments in Africa across the pre-seed, seed, and Series A stages, all within that blockchain ecosystem. So we are sector agnostic, so we'll look at any sector as long as there's that blockchain connectivity. So we monitor about 19 or 20 sectors within the pipeline and as part of the portfolio. But as is the case with the broader African venture ecosystem, about 50% of what we see is in the Fintech realm. I thought the keynote by Dari was excellent. You touched on so many great points there, particularly around stablecoins and their role and impact in that Fintech ecosystem in Africa. And I loved the picture about the internet in the 90s just being a fad, and that's certainly a core part of our thesis that, investing in the internet, in HTTP, SMTP, whatever the case was in the 90s, is kind of what we are trying to do now from a protocol point of view in the blockchain landscape. So very much look forward to unpacking that with you guys here today. Great to be here. Thank you.
Wonderful. Agnes, over to you.
Great. Thank you so much. My name is Agnes Eisleitner-Kisule. I'm one of the general partners at First Circle Capital. We are an Africa specialist fund investing only in early stage fintech across the continent. I'm based in Kampala and we have another team in Casablanca. And to date, we have a portfolio of 16 companies across 8 different countries across the continent.
Wonderful. I think what's so exciting about this panel is just where around a boardroom table each of you might sit. We've got founders, we've got people who came out of corporate in MTN and then founded something that grew across the entire continent over the last 15 years. Matt, yourself, and again, congratulations on the news in the last week. But having built what you have at Ikorka and the way that you serve merchants, again, from a founder now, a part of Nedbanks, but yet still operating, I guess I would speak on your behalf, but still entrepreneurially, still independently to an extent. And then, of course, we've got VCs who are looking to invest in early organizations or early stage businesses who are in particular solving similar problems to the ones that were raised, I think, today. And to our topic, I think there's two very interesting areas that we might be able to dig into together. The first is infrastructure. The second, perhaps, is trust, and maybe that one's slightly less tangible. But to the topics of infrastructure, and maybe if I could speak to our VCs today, you are investing in innovation. You're investing in companies, like Dari said earlier, who must continue to innovate despite perhaps regulators or infrastructure not being available. What is the infrastructure concern when you're spotting new businesses, who are fighting arguably infrastructure that could hamper their growth or hamper their potential? How are you seeing past that, or what's the view on infrastructure while these organizations are starting?
Well, to be honest, it's really about how you position yourself, and also part of your proposition on how you're going to overcome those challenges. Today, if we look at somebody with a stablecoin component, like utilizing that infrastructure, you need to have a credible strategy around how are you bridging the gap to bring it to the other parts of infrastructure, because that's not going to change anytime soon. And I have an investment horizon of 10 years. So I need to see, is there a tangible strategy? And also, especially when it comes to utilizing that infrastructure, it's not just about, okay, anyone can plug into that infrastructure, but how do you as a company have all the relevant regulatory approvals to operate within that space? Because that's ultimately where your moat comes from, not just utilizing into open infrastructure, that's basically what stablecoin is. So that is something that I really look at.
Yeah, brilliant. Jared?
Yeah, I think those are great points, Agnes. I think for us, it's not necessarily the stablecoins themselves or the stablecoin issues that are interesting. I think that technological development has been proven out. We understand what they can do. What's really interesting for us is that kind of, we call it the orchestration layer, so the combination of the infrastructure with liquidity pools, shared standards for compliance, accessibility, transparency, bringing all of those systems together to provide this unified experience for the end customer or consumer that's looking to utilize those rails. I think what we really look for is a deep sort of autonomous integration with the tech stack. So, we're not looking for, we see a lot of sort of OTC trading in a manual sense. Guys are moving a lot of money, and you can move a lot of money through WhatsApp groups and Telegram groups. That's not sustainable in the long run. We're looking for guys to build sustainable modes through that technology and through that infrastructure.
You touched on this topic as well of interoperability, which I think is crucial. Dari, again, I'm picking on your keynote, but the ability to be able to switch between digital currencies, fiat currencies, different territories. This orchestration piece.
Yeah, and I think, again, for me, infrastructure, it's very much important, as I mentioned. And I'm from the internet, I'm from the telecom and network, and it's always so difficult to imagine the killer app until it emerges organically. But if you go into the future, for me, the OTC, as you mentioned, it's interesting today, but what is really possible, what stable coins are making possible, is programmable money. Yeah. Is the fact that we can actually think about, I don't know, we grapple with this whole figure around AIDS money that is being used to buy alcohol and not school fees. Yeah. That becomes possible to program it. It becomes possible to actually impose those restrictions. Complex contract, trade finance that needs to, you're importing something from Ethiopia into South Africa, you can program the money to be released when the goods cross the border. So there is a whole world out there of application, real application, where we can see so much transformation. But in the next 2 to 3 years, I think the infrastructure has to be built. And that's where I think, founders, whether it's at a seed stage or later stage, still have a role to play to take that full view. And there will be even a question to say, at fund design for 5-7 years, if someone is in a 5 years fund, are they even geared to invest in what I'm talking about? Yeah. Because this is going to be a much longer, and of course, each fund needs to answer that, and of course, each founder, founders and team needs to answer that. But there is a big promise outside of this infrastructure investment that we must do, but I don't think we can skip it. I don't think we can just jump to the other side without actually doing the work of building the infrastructure that makes those killer apps possible.
Yeah. Yeah, and I suppose, we talk about what might be when the killer app comes along. What might it look like to be able to quickly, with interoperability, flip out USDC into local Naira to be able to pay for your rent? That is the ideal state. But I guess the frustration perhaps for many consumers is that, well, one day when I'm big, we may experience that. With that evolving, knowing that we are building wonderful businesses in the meantime, how are merchants thinking about this movement of money and stablecoin?
Yeah, I think small merchants aren't really thinking about it at all, right?
Yeah.
I think they just want to be able to accept whatever payment type their customer wants to pay with. I think it's more our job to kind of, I guess, take a lot of that complexity and simplify it for them. So if there's a trending type of payment that ultimately is being used to exchange goods and value, businesses like ourselves need to be able to enable the acceptance of stablecoin. I think Shopify now accepts stablecoin, and there's a few other e-commerce use cases, but probably limited use cases in the face-to-face space. So I think that it's up to the ecosystem to build that acceptance layer from an infrastructure perspective, which isn't actually that hard to do, especially as you start to think of a more Pan-African type play. Yeah. And I think maybe just coming back to Dari's point on the longer term horizon, another key point that came out of the B20 and the G20 is I think the expectation for DFIs internationally to really kind of invest behind the infrastructure that is needed in order to unlock kind of the potential of this continent. And this is, I guess, a key pillar of that.
Knowing that there will be this greater mandate, as you say, for DFIs to be able to invest, there's clearly an appetite around the world to be investing in decentralized solutions or Web3 solutions, blockchain solutions across Africa. To then talk about trust, you were mentioning that at the moment, smaller merchants are just worried about being able to accept car payments or whatever it might be, except by QR code. It would largely be a retail market that would need to then create a demand that the merchants need to learn to accept. In your ideal case, Daria is saying that one of the resistances is being asked to be paid in stablecoin. Well, if the buyer doesn't use stablecoin and the seller requests to be paid in stablecoin, you still have an impasse. So in a world of being able to keep your codes and have a device that does third-party verification, self-custody versus custody, how are you seeing, and maybe to pick on our VCs again, how are you seeing startups articulate their value well? Or are they articulating their value well to the consumer around these technologies?
Okay, I think for me, honestly, I think they probably shouldn't really articulate the value for the consumers, because as it is, you're just kicking down the foreign exchange can down the hallway. Because even in a world where you have, let's say, Uganda shilling stablecoin and USDC, you will still have a foreign exchange risk, and you still need foreign exchange, and you still actually need more demand for your local currency, unless we allow the technology ecosystem to dollarize an economy, and I doubt the governments will do that. So I think it's really for me, stablecoins today is a temporary, as it is today, is a good advantage for companies to offer services cheaper in the back end. But you shouldn't leave your customer with that issue of exchange or having to deal with exchange.
Yeah, so many good points. I think those this point about the cost structure is really important. So stablecoins enable this reduced cost structure, which opens a lot of possibilities. But as Dario said in the keynote as well, that's not the only cost in the stack. There's a lot of costs around distribution and agent networks and all those good things. So it's transformative in one sense, but it's not a sort of one-hit wonder solution. There's a lot of work still to be done. I think what we see definitely in this world of blockchain and stablecoins is that people are not really worried about what's happening in the back end, right? So I think it was one of the points that you made as well. So, you don't need to understand SMTP to send an email. You don't need to understand LLMs to use ChatGPT. You don't need to understand wallets and key phrases and all of that stuff at the end of the day to utilize blockchain efficiently and to get a better user experience. And I think that's certainly where we see a lot of startups going. So they are proposing a sort of Web 2 front end, let's call it, so a really slick user experience that looks very much the same as what you would get from a traditional fintech, like a Revolut or a Moneypoint or any of those big names, But in the back end, there's a lot of efficiency being driven by the implementation of these blockchain-based solutions. And there's a lot of B2B2C startups that are providing, wallet infrastructure, hosting, forex and risk management, treasury and liquidity services. All of those things are being provided in the back end, and the consumer gets the benefit, but doesn't necessarily have to understand how that came about.
Yeah. And so continues the trust in tools that they're familiar with, right? It's
Correct.
just, as you say, Web 2 on the front end, Web 3 on the back end. You don't need to know what the plumbing is, but the plumbing is still crucial, right? So if I may, we've got a few minutes left. We've spoken about what that beautiful future state could look like with interoperability. What do we think right now, if we're advising startups or there are people who are thinking of being in a startup, what are the most crucial problems that we could be working on to solve for Africa on this topic of cross-border payments? And maybe it is to infrastructure. What are the pieces that we should be developing ideas? And what are the businesses we should be investing in today for that ideal future?
Yeah. If I may go first, I think I will make the analogy again but with the digital terrestrial, how eventually we switched off the analog. We need to switch off the analog when it comes to money. So at some point, how money is created and moves, even domestically, will be on the blockchain. Just how long it takes to get there. And I think, for me, from a policy point of view, from regulators' point of view, is how we get there. What happens if, standard bank accounts actually, and the user does not need to know this, right? Like one of my colleagues at Afric used to talk about the crypto mullet, Web 2 in front and Web 3 at the back. That Web 3 at the back can happen, but it's almost inevitable that, if we make the parallel with the internet, that eventually the digital will take over. And the same way we turn off analog TV, we will have to turn off analog money.
Yeah, got you. I suppose you guys are probably working on these problems and building them right now.
Yeah, I mean, I think there's so much to learn and to understand how to get the killer use case that, works seamlessly, but it is definitely something we're starting to explore and hope to kind of build out over the next kind of year or so. But I think that the challenge and the part that worries me still is, as you get to a point that you build scale, if there isn't clear regulation in place, how do you invest behind that, and how do you get consumers to trust it? How do you get investors to kind of back the investments? And I think that is, as per, I think what was a great keynote, I think that is a key piece that we do need to get right, is how do we get African leaders and banks to be more progressive on the regulation side and almost then unlock the cycle of, all the other pieces that will come thereafter.
Yeah. Look, I think if I may, in conclusion, the beauty of this panel, it would have been very interesting to have a regulator here with us. We could have spent the whole time asking questions just to one person. But I think it does speak again to what AfricArena are doing, these kind of engagements, to have different stakeholders with the regulators at the table to be able to build an ecosystem for Africa, by Africa. Of course, all international DFIs and VCs are welcome, but building African solutions for the African communities, I think, is crucial. And I think it is an ecosystem play, so that ideal use case for Grace in Nigeria, Lagos one day, or whether she moves to Nairobi, Kenya, that she doesn't necessarily have to move banks.
Absolutely.
Yeah, so thank you all for your contributions today, your contributions to the ecosystem, and to the audience for your time. Thank you very much.
Thank you.
Thanks, everyone. Thanks,
Thank you.
Okay, guys. Thank you.